Welcome to the Valuation Dashboard for the weekend of the 26th of July. It's obviously been a very volatile week. I'm actually going to steer a little bit away from the events as we've ended up basically where we started a little bit higher, except for in China where markets are down a fair bit. I think the one thing I would like to add is obviously the US and European debt issues have been on and off again during the week. This is the sixth time by my counting that the Europeans have reached a resolution which should sort of solve this issue finally. And but I think the focus has been far too much on liquidity and not enough on solvency. So in my view, we haven't hit the point where it's solved as of yet. And this I'm looking for this to continue to flare up over the coming months. Now, what I have focused on this week are two things. One is just a bit of a long-term look. Is on the chart of the week we've got is the Case-Shiller PE. The Shiller PE, which is comes from Robert Shiller, who's of the Case-Shiller housing indices in the US, and he's a quite an outspoken Yale professor. And what he's basically looking at is saying that over what you should look at for PEs is over 10 years. You should look at an average. You should make some adjustments to the earnings to account for inflation, such that earnings 10 years ago you're not unnecessarily biasing against those ones if you've been through periods of higher or lower inflation, and then comparing that to the current PE that you're getting. So when you look at Australia on that basis, which is the black line here, what we see is that Australia, under 15 times, we're actually pretty cheap compared to the last 20 odd years. If you look back a little bit further, all of a sudden we don't look quite as cheap. What I have done is we've got a note out earlier on last week where we went through a lot of detail and sort of examined these earlier periods and looked to see what our thoughts were in terms of how cheap or as expensive is the Australian market at the moment. And the conclusion largely was that, look, things are relatively cheap. If you account for earnings, then they're not quite as cheap. The earnings downgrades that we're expecting. But well worth having a bit of a look. We've got the link there as well, and that goes into a lot of this and a lot of other measures of longer-term PEs. The other thing to note is that the US market, big difference between the US market and the Australian market. I suspect a lot of that's due to the currency issues. We're facing a rising currency, and so our companies are doing it tough. They're facing a falling currency, or they've been facing a falling currency, and so their companies are benefiting there. You also see that within other charts this week. Another one, just the long-term look at the PEs of the Australian market. We're down now to 11.1 times on a weighted average basis. On a median basis, that's more like 12 times. So within this report, we'll have a bit of a closer look at that, and also having a look at some of these where the froth in the market is. So there's 75th percentile and the 90th percentile. Basically, the top 10% of stocks have a PE above 17.1, and that sort of tracks back in time how that's travelled. And then the top 25% of stocks have a PE above 15.1, and tracking that back in time. And again, within that report, have a bit of a closer look at some of those details. The other thing I wanted to skip to, we've started I've put up online now our interactive version of the heat maps, which you've hopefully been looking at over the last little while. What you can do on this is you can choose different measures. So let's say we want to have a look at APS for 2011. We choose that we'd like to look at different levels you can look at, and then whether you want to show stocks or just sectors, and then finally you look at a particular sector. So let's say we start with the ASX 100. We can see which stocks have been upgraded or which ones have been downgraded on a 1 week basis. We can then drill down into that. So let's say we want to have a bit of a closer look at the industrial sector. You can see News Corp, Amcor, some slight downgrades, CPU, Worley. Now skipping back up, so you're left click to go into a sector and right click to come back up. You can also look at that on different measures in terms of whether it be the 1 month change in that. You can look at the different EPS 2012, for example, where we're talking a lot about downgrades, but we're actually seeing upgrades right throughout the mining sector. Downgrades throughout most other sectors though, but given the size of the mining stocks, that's why we've seen net numbers coming up. The other thing you can look at is a whole bunch of other measures, things like PEs, yields, all that type of stuff. So you can actually say what's the graphically show me where are stocks that are cheap or expensive in terms of PEs, looking through different sectors.